Welcome to The Explainer. When the global economy really starts putting the squeeze on us, the invisible financial machinery behind our daily transactions has to evolve, and it has to evolve fast. So today, we're looking at the three pillars of modern fintech survival. And we're going to do it by looking at a snapshot from just one incredibly revealing day in the market. Okay, let's dive straight into this. Here's our roadmap for today. We're kicking off with a wild day in fintech, then looking at Affirm's Prime Day MVP. After that, Shift4's World Cup ticket, PayPal protects the Rhinos. Yes, you heard that right. And finally, the big fintech takeaway.
All right, part one, a wild day in fintech. Checking out June 24th's top stories.
Listen, business as usual in fintech is rarely boring, right? But yesterday was the kind of day where you genuinely had to check the calendar. We saw three drastically different companies make some major moves. And the connective tissue of this explainer, the whole reason we're talking about this, is the why. These moves are absolute masterclasses in navigating modern business threats. We're talking about surviving consumer cash crunches, eliminating looming debt, and fixing plummeting public relations in a really tight 2026 economy.
Moving on to part two, Affirm's Prime Day MVP and the front-end consumer.
Think about this staggering data point from Adobe Analytics. $8.3 billion. That is what U.S. shoppers dropped online on day one of Amazon Prime Day yesterday. It's up 5.3% year over year, making it literally the biggest single e-commerce day of 2026 so far. But, the sheer volume of money isn't actually the real story here. The real story is how people are paying for all of this stuff.
The breakdown of all that spending brilliantly illustrates exactly what's going on. Out of that massive pie, Buy Now, Pay Later is expected to account for $2.04 billion. That represents 7.8% of total Prime Day sales, which is a solid 5.5% growth from last year's Buy Now, Pay Later slice. Affirm is wired directly into Amazon's checkout, allowing Prime members to just split purchases over $50 into installments. So when you're staring at an amazing discount, but your bank account is, feeling a bit light, Affirm is the button you press. This blunt truth from Cardiff CEO William Stern pretty much tells you everything you need to know about the current macro setup. He told Reuters very simply, people just don't have the cash right now. And that is a fundamental shift in behavior. Installment lending has completely stopped being a luxury and has transformed into a basic utility for the everyday consumer.
So let's zoom out a bit and see how this builds a larger picture of Affirm's health. Honestly, Prime Day was just a live, very public demonstration of Affirm's already rock-solid fundamentals. Just listen to these numbers. Gross merchandise volume hit $11.6 billion last quarter, up 35%. Revenue, $1.04 billion, up 33%. They even renewed a massive $1.7 billion forward flow lending deal earlier this month with CPP Investments. The market absolutely rewarded this live stress test yesterday, pushing Affirm's share price up 9.9%. Turns out, when consumers are cash-strapped, becoming their financial lifeline is a highly effective survival mechanism.
Okay, part three, Shift4's World Cup ticket, looking at the invisible back-end B2B world. While Affirm was grabbing all the flashy consumer headlines, Shift4 made a much quieter but arguably just as critical move. Think of this like, deep cleaning your house weeks before you host a massive party. The big risk hanging over them was their convertible notes maturing in 2027, and if you let debt linger, it becomes a massive headache down the road. The solution? A proactive $750 million term loan to pre-fund those notes. S&P Global absolutely loved this, affirming their BB rating, all because Shift4 aggressively took refinancing risk completely off the table. To really understand why this balance sheet cleanup is so vital, we have to look at where Shift4 actually operates. Founded way back in 1999, they aren't the ones processing your online Amazon orders. They live in physical, chaotic, high-volume environments. We are talking hospitality, bustling restaurants, huge entertainment venues, and crucially, stadiums. In these environments, every single split-second transaction counts. And that leads us to the impending tidal wave. Shift4 is getting its debt house in order right before 48 countries send their absolute most passionate fans to U.S. stadiums for the World Cup. A Truist analyst flagged this exact improving profitability and the super meaningful upside from World Cup-related payment volumes. And get this, even though Shift4's stock is down nearly 30% year-to-date, yesterday shares soared 11.8%. The market is actively starting to price in the massive tailwind of the world's biggest sporting event. On to part four. PayPal protects the Rhinos, focusing on the global ecosystem and ESG. Seriously, take a second and just think about this. What on earth does a global payment app have to do with saving endangered rhinos? It sounds like a total Mad Lib sentence, right? But yesterday, PayPal joined a coalition convened by Prince William's United for Wildlife to combat the illegal wildlife trade. It sounds totally out of left field, but the underlying business logic here is actually fascinating. Now, what's really interesting here is the sheer mind-boggling scale of the problem. $23 billion. That is what the UN Environment Program estimates the illegal wildlife trade generates every single year. It is a massive, highly coordinated, and heavily funded shadow economy. And the kicker? Traffickers use the exact same global payment rails that you and I use every day. It's wild how cleanly PayPal's existing architecture maps to this new global mandate. PayPal already operates across more than 200 markets, working alongside partners like Google, Meta, and Chainalysis. They don't need to invent some brand new product here. They are simply re-aiming their existing fraud tech. Transaction monitoring instantly becomes a tool for disrupting global financial flows. Sanction screening, that becomes a way to identify known traffickers. And their advanced blockchain forensics are now being used to trace the crypto payments that actually fund poaching. It is an incredibly smart, highly efficient reallocation of resources. But to really understand the timing of this move, we have to neutrally look at PayPal's current reality. The company is going through a pretty brutal restructuring here in 2026. The stock is down roughly 46% year to date. They've had to slash 20% of their workforce, bring in a brand new CEO, Enrique Lores, and completely reorganize the entire company into 3 distinct business units. Simply put, they are a legacy giant in desperate need of a serious narrative shift. Which brings us to the underlying strategy here. Going over to London to ally with Prince William isn't just about, charity. It is a massive compliance, integrity, and ESG play. ESG stands for environmental, social, and governance, and institutional investors deeply, deeply care about these metrics right now. Regulators definitely notice when a company takes active steps to fight global crime, so PayPal is using its vast network to try and save the rhinos, for sure, but simultaneously, they are trying to save their own reputation and standing in the global market. And finally, Section 5, the big fintech takeaway: survival of the fittest. So the absolutely crucial point here is this: survival in today's wild economy requires pulling entirely different levers depending on exactly where you sit in the ecosystem. Affirm proved that buy now, pay later is a necessary lifeline for consumers. Shift4 proved that de-risking your balance sheet ahead of a massive real-world event is a winning B2B strategy. And PayPal just reminded us that leveraging your existing tech to fight global financial crime is a powerful way to redefine your company's global value. I want to leave you with this thought to mull over. The infrastructure of money is constantly being rewritten, quite literally right under our noses. As these financial platforms reinvent themselves to survive, how will these hidden mechanisms of money, from how you finance your groceries, to how you buy a stadium ticket, to how international crime is tracked, how will all of that impact your daily life? This explainer is really just scratching the surface of the systems shaping our future. Thank you so much for learning with me today, and keep questioning the infrastructure around you.